Hello everyone, today is Friday, September 16th, 2022. My name is Evan. Welcome back to another edition of Stock Market Weekly, presented by the Trade Risk, where it is our job to break down the most important trends, price action, and noteworthy moves that you may have missed across financial markets. If you're brand new to this video series, welcome. Thanks for being here. Thanks for joining us. Here's how these videos work. We break up our analysis into two parts. In part one, we go through the numbers, we pick apart everything that stands out, looks interesting, notable, or different. And then in part two, we jump into the charts, we take a very close look at price action and those broader trends and try and best position ourselves looking ahead. So hopefully that sounds good to you. Let's jump into some of the takeaways from this week. The big story at the start of the week was the August CPI inflation data that the market threw our way. We got a print of 8.3, I believe was the reading for August, year-over-year number. And that was coming in hotter than expected. The market was expecting a lower number. I think consensus was around 8%. I believe last month or peak inflation was coming in around 8.5%. So yes, we did not break out to new highs in our inflation readings, but it did come in hotter. And then of course there's a debate of, you know, how accurate are these and looking at core versus X core and all that fun stuff. The point was that was the catalyst to really see a fresh kind of a bucket of ice cold water on the market. We sold off aggressively into that. We ended up producing a bearish engulfing weekly bar on all of the US indices this week. So the price action from a weekly perspective looks horrible. We had new highs in Treasury Yields, specifically the short end of the curve. So basically everything under maybe a 5-year maturity or so started to break out to new highs, also causing anxiety for the market as essentially we are now locked in, it seems, with a 75 basis point rate hike at next week's meeting. Some talks of even 100 basis points that could occur next week. That'll be a catalyst. That'll be an interesting spot to see how the market digests the updated federal funds rate next Wednesday. On the other side, I don't know that this is necessarily even a bullish side point, but we have still yet to see a real kind of blow off capitulative VIX move, right? We haven't seen the VIX really scream to the upside. I believe it was up 15% this week, but it still was, you know, hovering around 25 or so. And it really can't get that juice to put in some real panic capitulative bottom, it seems. We had new lows in gold, and we got the ETH Merge, which was successful for all you crypto traders and ETH cheerleaders. We'll talk a little bit about that later on. So plenty to talk about. Let's get into some of the numbers here. If we look at the right-hand column, you can see just another horrendous week for the U.S. markets and globally as well. Globally, though, is actually, and when I say globally, I'm removing the United States, looking at the ACWX index here, and you can actually see that on, you know, even the 1 month numbers starting to show just a smidge of relative outperformance, but it's not saying much. Still down 7.5%. But look at the Nasdaq this week, almost 6% down. Look at it over the past month now; it's down 12.18%. The Russell, the S&P, very close behind as well, and it's basically just a sea of red here. If we take a look at our trends as we sort of slice the different time frames here, we almost have unanimous declining moving averages at this point. So if you recall, we were sort of sandwiched in here with a 50 SMA that was rising in the S&P and the Nasdaq. Those flipped down this week, but we still have the Russell that's hanging out here. So again, you still got this little bit of relative kind of outperformance here in the Russell, but we still have that rising. I would suspect if we are to see another sell week next week or even a flat week, that this will start to turn down. Volatility environment, like we sort of just mentioned at the top of the video here, everything was up this week. And when I say everything, that's the VIX for the S&P 500 and then the Nasdaq Volatility Index, both up about 3.5 points this week. VIX is sitting around 26, Nasdaq almost 33, and both of those in, you know, again, just a painful spot for the market. We, again, just aren't seeing the real big inflow here into the VIX. We did have OPEX this week as well on Friday expiring, so there were, I forget the notional expiration, but it was a big OPEX this week. So so maybe, you know, we'll have to gauge what this number looks like on Monday when we start essentially a new front month calendar. Now, our drawdown monitor here, I'm bringing this back because things are getting dicey again. If you recall, back in mostly June, these numbers were hit. These were the max kind of cycle drawdown lows, the max drawdowns we saw from 52-week highs to the lows made in most cases in June, I believe. And so you could see, you know, 25%, almost 25% in the S&P, 34% in the Nasdaq, 33% in the Russell. And when we look at where we are now, we're starting to be within basically 5% of retesting those cycle lows from earlier this year. It seems like the market may want to have a date there in the near future to see if we can still find some support. We'll talk a lot more about that in part 2 of this video. Now, another sort of, you know, bearish data point here, just more, again, cold water getting thrown on any type of bull narrative right now, is the fact of earnings and guidance and what some of these companies are starting to essentially hint at or give their perspective on future guidance and economy, just generally speaking. FedEx was the big story here going into the weekend on Friday or Thursday night. They reported earnings. They withdrew their entire full year guidance and they warned of a global recession along with a lot of other things. And basically, you know, the slowdown is coming much faster than they originally anticipated. And, you know, coming from a big kind of bellwether like FedEx here, it did spook the market. It had its worst day of trading ever, which I think was a nice headline everybody was reporting on. You can see it here with our rolling returns layout in TC2000, how big this spike is. Again, I'm only going back 2 years, but you could go back, you know, the full existence of trading here for FedEx. They just didn't want to make the chart super small. And a lot of these numbers are just readings are basically just off the chart. So that's more kind of bear narrative and bear catalysts, which are spooking the market on this week. If we take a look at market internals here, nothing much better. We continue to see more new lows being made, and we're actually seeing those new lows begin to accelerate once again. You can see it started off the beginning of the week here with only about 37 lows made in the NYSE on Monday. Then it turned to 105. Then it turned to 183. Another, you know, pretty much 180. And then on Friday, these are preliminary numbers. I don't know what this is actually going to turn out to. I actually suspect it's not this high. But again, just still trending in the wrong direction here. We want to start to see those go the other way and start to dry up before we can get much more excited about the market. Now, if we take a look at sector performance here, everything was in the red this week. Healthcare was at the top of the list, still down 2.25%. Energy was down 2.5%. Staples were down 3.5%. But the big losers were materials, industrials, and communication services. Take a look at that. In fact, go to the 4th worst and 5th worst, and you've got 5 sectors here that were down over 6% this week, and that obviously causing lots of pain. And if we go to the middle column here, which is the 1-month look back returns, you can see, again, just a sea of red and lots of double-digit percentages in there. Now, I wanted to also include the industry rankings here. So this is by IBD. So IBD is a great sponsor of ours. Thank you, IBD, for sponsoring the show. And this is a look into their rankings here. So this you need a subscription for. And what we're looking at here is basically just the top ranked industries. So these are, again, more specific than the sector view of what's actually working, what's holding up. So again, if you're asking yourself, where's the relative strength? How can I curate a watch list in this dismal environment? This is it. And it's basically littered here with oil and gas, energy, and solar, and a little bit of healthcare, basically. That's kind of the sprinkle in here. So these are the top 10. Check out the link if you want to get access. They update this every day, and you can get access to the full list, leaders, laggers, and everything. We get a link right in here in the description of this video as well. Now, if we take a look at correlations, you got correlations here that are still a lot of bright red, bright green on this chart, which basically says things are moving very closely together or inverse to one another. And these are 10-day correlations as a reminder. Basically here, we've still got just a massive negative, almost, you know, perfect inverse correlation to what the dollar is doing and what risk assets are doing. I think, you know, as we've said many weeks now, watch the dollar, or, you know, pay attention to the price action of the dollar. If you just know what that is and looking like, you can probably guess what the stock market's doing. And that has not changed. That is becoming a long-term correlation, inverse correlation at this point. You can take a look at J&K, take a look at Bitcoin here, also trading very much like a risk equity asset at this time. Treasury yields. So these are breaking out to new highs. Not necessarily the 10-year. I think jury's still out. I don't think we technically broke out to new highs yet on the 10-year. It's close. 30-year, similar situation. Everything under 5 years basically is making new highs right now in terms of yield. So the longer maturities are still, they're rising, but they're not necessarily hitting highs yet. So I'm going to try, I think I've said it before, update this to get more yield maturities in there. But yeah, pretty ugly picture there. And that just naturally by extension puts pressure on, lots of pricing and multiples of stock market assets. So now if we take a look at dollar and commodities here, you can see silver was at the top of the list. Silver was up 3.87% today, so kind of bucking the trend. Dollar index was up 0.72%. So again, dollar is the wrecking ball that kind of puts pressure on everything else. Agriculture, crude oil, gold, which is a new multi-year low in gold this week. Even natural gas and Bitcoin all red this week by, about 2 to 10%. Last but not least, speaking of Bitcoin, crypto, and Ethereum. So Ethereum had the long-awaited merge. So the upgrade to the network, which has moved it into a proof of stake network. We're not going to go into all those nitty-gritty details, but this was a long-awaited event, and there were actually lots of options placed on this event. There was kind of a big kind of sentiment battle here is what was the trade? Was it priced in? Were we going to see lots of money on the sideline come rushing in? Were we going to sell off aggressively if the merge had some hiccups? And we basically got kind of a dud or a nothing in terms of a catalyst and the immediate action that followed the successful merge. Ethereum didn't really do a whole lot. The day after, with stocks and macro and everything else, it ended up selling off. And in fact, you can see it's back down towards its multi-month lows here, 2-3 month lows here. So Ethereum, congratulations. Nice job on the upgrade. All the developers, team working on that. It was very impressive technological upgrade. If we look at price action just more broadly here, again, just sideways for the last month and a half or so, it's still about 50% off of the lows from June. So it's pretty well off of those lows as of right now. We'll see if that can hold, but that's kind of the scoop and radar on Ethereum. So we're going to end it there. We are going to continue on with the extended version of this video. We're going to look at our positioning of our trading systems. Then we're going to jump into the charts, look at price action trends and some movers for next week. If you would like to continue on, if you want to get access to this video, the full length video, head to thetraderist.com/SMW. If you're not there already, you can purchase this single episode for $5. You can watch the next 15 minutes, or you can subscribe on a monthly membership, $15 a month, gets you access to our full length videos, keeps you up to date with everything that's going on and all of our thoughts looking ahead. So hopefully you've had a good week out there. Thanks as always for tuning in. If you want to catch the rest of this episode, do subscribe, and I hope to see you back here next week. Take care.